In today's digital driven times, technology is the backbone of businesses. Establishing a strong tech infrastructure and keeping abreast of technological advancements is the need of the hour. Now, in the world of supply chain financing, digital transformation is transforming the industry by introducing innovative technologies that streamline processes, improve efficiency, and enhance the overall financial visibility. Hello, everyone. Welcome to the Analytics Insight podcast, where we talk about the ever evolving tech space. And I'm your host, Priya Dayalani. Now, new technologies like generative AI or automation are reshaping the industries and contributing to making processes faster, more efficient, and even more transparent. Now, eventually, they are paving the way for improving the cash flow, reducing risks, and creating stronger, more collaborative supplier buyer relationships across the global supply chains. So, let's welcome Manish Kumar, CEO and founder of KredX, to help us gain more understanding around the supply chain financing and how probably we can evolve with the changing times. Hi, Manish, how are you doing?
Thanks, Priya. I'm doing good, and a very good afternoon to all your listeners.
Great. Thank you so much, Manish. It's a pleasure to have you with us on a podcast today. And of course, as a host here, supply chain financing is kind of a new thing that I would be probably learning today from you, and of course, gaining new insights around this particular concept, I would say. But before we dive deeper, into our conversation, we would like to know more about KredX. So, if you could help us understand more about the company, its specialization, it would be great.
Sure. So KredX is now over a decade-old company. We were the first sort of, you can say, the original architecture of supply chain finance as a platform in India and possibly in the world also. So we started in 2015 as creating more like an exchange where anybody can discount their invoices which they have raised against another company and get the money up front. So I tell you what's the problem statement was. So unlike in a B2C environment where the consumer is the end sort of a player who is consuming the services or the product, in a B2B environment it doesn't happen. So a business buys from another business and then they do some value add in between, and then they further sell it either to consumer or to another business and so on. So till the time the final consumer doesn't pay you, typically you are not getting paid as a business because the business in front of you whom you have sold has also not got paid. So typically it creates sort of a working capital issues. So to give you an example, let's assume that you are a new company, you started at, you get friends and family to give you, let's say, 10 lakhs rupees. You started creating something and you got lucky, you get a tender from some large company to supply that product. Now you use that 10 lakhs and supplied, let's say, 12 lakhs worth of goods to another company. The other company is now saying that, hey, unless I will get paid after 90 days or 60 days, I cannot pay you. So for next 60 to 90 days, you're sitting idle waiting for the money to come, right? So that's usual what used to happen in a B2B transaction or B2B trade. Now here where a company like KredX enters, where we started doing is that you have a 12 lakhs invoices, you sell this 12 lakhs invoices to somebody else, right, at a discount. Let's say against 12 lakhs you are ready to take 11 lakhs 50,000, so you let go 50,000 worth of profit, but you are still getting the money on day one. So the two scenarios, one is where one company is only producing 4 times a year because there is a 90 days payment cycle, versus another company who is getting paid every day, right? So the profitability might reduces for the company, but the overall revenue and profit of the company is like much more than the company who is only able to produce 4 times. So that's the problem statement that's through which we wanted to solve. We started KredX against that. Over the period, we became like the leading supply chain finance platform in India, possibly the largest also. This year, in the beginning of this year, we got a license from RBI under their TREDS platform. Threads is sort of similar thing what KredX was doing earlier, but it's comes under the ambit of RBI. So we got the RBI license to launch our own Threads platform called DTX, which is Domestic Trades Exchange. And under that format, we are bringing a lot of like 70 odd financial institution on the platform, and so are we are bringing buyer and sellers on the platform to discount these invoices. We are also one of the few doubly licensed entity in India, where we also have a license from IFSCI and Gift City, where we can do the same stuff that we are doing on domestic trade, but the difference is here we do it in a cross-border trade, which is basically any export import invoices that comes on that is there, we can discount them and give the money upfront. Now, if you see in the cross-border trade also, there is a huge deficit in terms of what we export or import versus what is the availability of finance. So together, India does on a monthly basis almost around $100 billion worth of export and import together, but the availability of credit is almost around $2 billion. So almost $98 billion is a gap that is there existing in terms of the cross-border trade also. So and what we did is we also created a platform or a SaaS product called CMS, which is a cash management system, which basically helps the companies to manage their account payable receivables and also help them in both domestic trade finance as well as cross-border trade finance. So that's in a nutshell the company is as such.
Great. Thank you so much, Manish, for that insightful introduction to KredX. And I'm really glad to know that, KredX is one of the leading supply chain finance platforms in India. And really happy to have you on a podcast today. And, as we move forward, I would also like to explore how your role, specifically is driving this innovation. I mean, you are an IIT Kanpur alumnus and you come with a decade of experience in the banking and financial industry, and you've been working, since 2005. So, can you tell us more about yourself? How has the journey been till date? And of course, what triggered the birth of KredX?
Yeah, so I started after graduation from IIT Kanpur. I joined City Financial as a product manager. This was a time when product management was not that glamorized as it is currently going on. Then after that, I worked after 2 years with Citi. I worked with almost 9 years with HSBC in their cards and retail services for their US unit, where I was managing the risk acquisition for the bank. And in somewhere around 2012 is when HSBC sold their card portfolio to Capital One, and as a part of the deal, I moved to as into Capital One. With 2 years in Capital One, I started realizing is that there are a lot of issues in terms of financial sectors in India where there are a rate disparity. There is not much you can say. The access of capital to MSMEs was happening, and I was started thinking is can we create a different kind of a product or a different kind of overall arrangement as compared to just banks and one-to-one relationship? Can we create an exchange where anybody can come and ask for a money and anybody can give the money to them against something like an invoice which is backed by a large company? So against that things that we started in 2015, we able to get a very good team in place during that, and glad to say that most of our team members who were joined at the earliest stage are still with us. We raised 3 rounds of fund from Prime Ventures, then Sequoia, and then Tiger. And since then, this entire journey is going onward in terms of this entire piece. My role as such in the company is basically providing strategic and tactical guidance to the entire team, setting up the entire operations, working with regulators, working with client sales, pretty much all the and entire functions is where I can create some, hopefully creating some value prop for the entire team to do wonders on that exchange space.
Great. I mean, I must say your journey has been pretty much been very fascinating, Manish, and thank you for sharing that. And of course, I mean, it's setting ahead the tactical strategies, and of course, integrating innovation with execution is it really aligns with your deep domain expertise. And thank you for sharing that with us. Now, let's zoom out a bit to to understand, the broader landscape KredX is functioning into. Now, amidst the rapid globalization and complex supply chains, I guess businesses worldwide have found supply chain finance to be one of the most essential tools for their day-to-day business activities. Now, the need for supply chain finance in the Indian market specifically is much more pronounced due to a range of factors. I mean, India's economy is characterized by a considerable number of micro, small, and medium enterprises that often faces, difficulties with cash flow issues and I guess also even delayed payments. Now, apart from, small and medium enterprises that have to meet their financial needs, I think supply chain finance also provides efficiency to manage the complexities of cross-border trade. So, how do you think, that digital supply chain finance has evolved in India, and what role do you think technology, specifically, artificial intelligence, has played a role in transforming the supply chain finance?
So I think technology-wise, it's like you can say it's a AI moment for supply chain finance in general. Typically, before the advent of exchange like us, what was happening? It's more like a one-to-one relationship, right? So me as an MSME may or may not have access to all the financials. Me as an MSME is only working with my my current account holder bank, or maybe one or two other banks. What it leads to is a higher cost of capital for these MSMEs, as well as most of the times they doesn't even have the capital. Most of the banks they used to work is mostly based on collaterals, right? So my collaterals doesn't grow as much as my business, because my fixed assets is it's a normal things, right? So you put some capex into your fixed assets, you grow that fixed assets, and you try to get more sort of variable income from that. But because your fixed asset is constant, you are not able to collateralize much, and you're able to get the desired cash flow as such. The second thing which also happened post COVID is the overall B2B business, the supply chain has become distributed, right? So it's no longer sort of the area where you can say that the OEMs is there and all their suppliers and vendors are also in the same area. So they are pretty distributed. There's China plus one strategy playing out, where companies are saying that, hey, I want to have my supply chain distributed across the globe to diversify my risk, which might happen. On top of that, recently, because of all these tariff wars, there is also now more and more things is coming up in terms of localization plus diversification both together. Now, if my supply chain is distributed, it's become very hard for supply chain finance to not being in digital and help them out. So a lot of large clients, let's say, are sitting in one place. Their suppliers is all over the world. So how can you help them without meeting them on a face to face? And that's where the technology plays the entire thing. Only on the supply chain finance side, what has also happened is with these trades as an exchange, or the ITFS, which we have a license upon, these kind of like exchanges started coming in, where they say that, hey, we will work as an exchange, we will connect you to all the known financial institution in the world, and because we are an exchange, we can offer you the best rate that is possible. So now if you see on trades, the lowest rate that MSME can get is like literally at the same rate as what their larger AAA rated clients were getting at, like 6.5, 6.6% kind of a rate, and even at a triple B can get it at a sub-10 rate, which for MSME was unheard of. So what it does is it leads to reduction in the cost of capital for these MSME. It also leads to consistent cash flow for these MSME, leading to higher profits, higher business, and their ability to grow much faster. Now, if you have heard the last budget, even government of India has said that one of the pillars for our economy is MSME. So we have around 6.9 crore MSMEs in India, and they generate the maximum kind of a job as well as growth for the company. But most of these MSME struggles for finances. So that is where the technology comes into play, which says that you don't need to move out of your office. You can be at your office, and you can use the technology to reach out to any and every financial who is ready to give you the cash flow at the best rate possible. So that is where the advent of technology comes up. Now, what happens with AI is going to help a lot in terms of, because again, India is a very diversified country, right? There are various languages, there are various culture as such is there, and that is where AI can help us in reaching out to different MSMEs, irrespective of their language, irrespective of culture, to help them on board, to help them interact with the platform, and help them in the overall financing journey for them. So that's, I feel, is the role of the technology as such.
Definitely. I agree with you, Manish. And the digital supply chain finance has, I guess, moved from a very largely fragmented process to a more data-driven and intelligent ecosystem. And of course, thanks to AI and other technologies that are bringing in, more visibility. And I think it's not just for larger enterprises, but also for, SMEs that kind of form the backbone of the Indian economy, just like you said. And of course, I think with these technologies, it's not about just speed and efficiency, but it's kind of empowering smarter decisions at scale. And of course, in a country like India, which is so diverse, and of course, where supply chains are complex and deeply regional, this kind of technological leverage can be a game changer in improving the liquidity and the overall resilience.
Also, Paige, just to add on this is, so earlier also, before the advent of too much of technologies or exchanges, supply chain finance as a one-to-one relationship was existing, but it never able to grow as much as it has grown now. And one of the reason is basically that in the invoice discounting stage, a lot of fraud used to happen, right? So with the advent of technology, data, AI, what these exchanges can do is basically they can figure it out with much more accuracy in terms of if there are any frauds that is coming up, if there are any invoices which are not supposed to be discounted or has been double discounted. So all those things can be pretty much solved by the technology. So what it leads to, it gives the financiers or the banks more sort of a comfort or more trust in the system to go ahead and do as much as they want. So earlier, when they are saying that, no, I want to do a one-to-one relationship, I have my own format, and each of these process used to take 30 days or 45 days to even disperse the money on a 60 days invoices. Now with the technology, you can actually do it in the same day, right? So it makes the entire process more democratically. It makes the entire process more fast, more scalable, and more secure for everybody in the ecosystem.
Definitely, and thank you for sharing that. I guess, it's not just about being efficient, but also ensuring that the risks that usually come across in terms of, using the financial platforms is how technology can definitely be used to, eliminate these risks and ensure a more secure financial ecosystem that probably India definitely deserves. And of course, my next question is somehow related to what we discussed. I came across a report by SIDBI which says a credit gap of rupees 30 lakh crore persists for the MSME sector, which is kind of equivalent to 24% of the total debt demand. Now, of the total demand, only 14% of the credit demand by MSME are met through formal financial ecosystems. Now, the reasons for this are many, from information asymmetry and insufficient documentation to limited formalization and lack of collateral. Traditional lending models, of course, they lean heavily on credit scores and asset-backed financing, and they often exclude smaller or informal businesses, especially those in rural and semi-urban regions. So, what are the persistent credit financing gaps for MSMEs in India, and how do you think technology is instrumental in bridging the gap?
As you have mentioned the SETB report, right? There's a massive gap, and as such, and some of the points which we have already covered, as in terms of collaterals, too much of documentation and all. And I think that is where TREDS is a platform, and DTX is, trying to change a lot of these things. So what is happening in this exchanges is basically that, now it doesn't matter who the MSME is, who the seller is. Pretty much, it's become sort of not a point. So for example, in our platform, we are not looking into what is the credit score of the MSME or how good, bad, ugly the MSME is. What we are looking into is basically who is the buyer buyer of these MSME, who's these MSME are selling it to. Now, even if I'm a micro enterprises and I have a, at a personal level, it's a proprietorship firm. The personal level, the company proprietor may have very bad credit scores and all those things, but he got lucky, and or he has come up with a product where the need of the product is good, and he got like, five large buyers. Let's say, you have Reliance and Tata and PSUs like IOCL, etc., are your buyers. Then basically on these trades platform, it doesn't matter what is the profile of the customer. What it matters is you have an invoice. These invoices are accepted by your buyer, and the buyer is also there on the platform. So once this is set it up, the banks does not look into other things. So what these platforms are doing is we are doing the KYC, and most of these KYCs could be digital also in nature. So we do this KYC, and then the entire process become, as I said, is the entire discounting or entire financing can happen in less than a day for that people. So sitting in your office, that's why I say that sitting in the office, the access to capital is huge. So combined together, just to give you some numbers as such, trades together in India is doing closer to around 35 to 40,000 crore a month. And so far, trades has done more than 5 lakhs crore of invoice financing in India, and it's growing at a rate of more than 100%, compounding growth in on a year-to-year basis. So that is the kind of impact that has Trades as a platform has done to these MSMEs. So these gaps are still there. Of course, India is growing at a massive pace. We are the fastest large economy in the world. And because of that, the need will, or these gaps is going to be there. But because of the effort from the government, the regulators, I think there's a huge push that is going on in terms of how to get these MSME into the formal credit process, and not let them get exploited by informal credits where the rate are too high, and they're still forced to take those finances at a higher cost just to sustain their business.
That was a very compelling perspective, Manish, and it's pretty clear that while MSMEs, form the backbone of India's economy, they of course continue to face fundamental challenges in accessing, affordable credit. And of course, with your response, I think what really stood out is that technology is no longer just an enabler. I think it's becoming more like a strategic partner, in bridging these financing gaps. And of course, with platforms like KredX, we will see a complete reimagination of what inclusive finance look like. And I think with that comes a ripple effect where small businesses can thrive, and we can increase the flow of jobs everywhere. There's innovation and of course economic resilience. Moving ahead, when we're talking about digitization, I think digital transformation fosters a more collaborative platform that can unite all supply chain stakeholders. They can improve the communication and increase transparency as well. Now, such shared partner ecosystems unite buyers, suppliers, logistics providers, banks, investors, and they kind of ensure seamless interconnectivity. Now, this synergy optimizes capital flow, driving efficiency and cooperation in the financing process. So, can you highlight the importance of collaboration among various stakeholders, whether it's government, industry associations, banks, and fintech platforms?
Absolutely. I think one of the glaring example of this is the GEM portal, right? The government e-marketplace, where what government has done is they said that any tendering that is happening across the government, PSUs, etc., has to happen through the marketplace. So what it brings is earlier when tendering used to be a closed process, very few used to know that what is happening. Now it's pretty much in the public space. Any company who matches the criteria can basically come and bid for the tender, and it's pretty transparent in terms of who will get the tender, and how the tendering works. Now once the tendering happens, you started supplying the product, and that is where the finance automations or supply chain automations comes in, where the finance team can say that and again it basically maybe goes back to the COVID era where people started working from home, but company still needs to work, right? So that is where your finance teams become distributed, your procurement team become distributed, your suppliers become distributed, and they all started coming on the system where they're saying, hey, here is the product or services that I have given, here is the under this work order or PO, and here is my invoice, and here is my GRN or good received note. And based on that, finance team sitting somewhere maybe 1,000 kilometers away from that suppliers, and the procurement team which is sitting another 1,000 kilometers separately from that finance team, they're both able to approve the invoices and make sure that the payment is happening on time. So these entire transformation which is happening is a massive. Even from the, as I mentioned earlier, that one of the pillars that the government has mentioned this last budget is the MSME and export both, right? And there is a lot of push that is going on from the government side to make sure that these exporters or MSMEs comes into the mainstream. So whether it's Udyam portal where the MSME can register themselves, or where there is a portal where MSME can actually flag it out that their payments are getting delayed. There is a lot of other laws or act has also been implemented by the government where they said that if you're not paying your MSME in 45 days, then we will basically credit your expenses of that MSME, and that will become a taxable income. So a lot of these supports, which as a rule or an act which government is pushing, there is a lot of platform access which from the government or from private sector is coming up to bring everybody into the digital framework where acts at least because of information asymmetry or information arbitrage, it should not be that somebody who can give you a better technology or a better product can be left out of the entire supply chain ecosystem. So that is where the entire I would say the transformation is happening in terms of how to bring people sitting in northeast of India but coming up with a very good advanced chip, let's say, and they can able to sell it to the likes of, let's say, BHEL or HAL, to say that, hey, here is my contribution towards making India stronger.
Definitely, I agree with you. And I think when you're talking about collaboration between different stakeholders, specifically in the finance industry, I think it is now becoming a very fundamental building block in creating a more secure and inclusive financial ecosystem, specifically in India, I would say. And of course, whether it's about ensuring smoother compliance frameworks or regulatory bodies, I think the synergy among these stakeholders is what can further drive the innovation and, of course, ensure economic progress as well. Having said that, Manish, one last question for you. How do you think is the future of, India's digital finance infrastructure, or what are certain trends you think will shape the future of India's digital financial infrastructure?
I think there is a lot of things are happening in terms of digital finance side. I think the crowning glory on India is, of course, UPI, which works as a digital payment. And with the success of UPI, the government has started working on a lot of different digital infrastructures. Whether there is this ULI is there, which is uniform lending interface. Whether it's trades, which has already made its marks on the economy of the country. There are a lot of other things is happening. But if I have to pinpoint maybe 3-4 digital technology which I feel can be a massive finance transformation for India as an economy and the entire ecosystem, I would say one is definitely the trades platform, which I said it's growing at a more than 100% CAGR as such. I think ULI also has a good sort of a future in terms of creating this, making the lending as such more democratic and can be accessed by anybody, anywhere, sitting anywhere in the entire India. Apart from that, I think one other thing which I also focus is now, because of this tariff wars going on, India has to focus a lot on their export import piece, how to lower the import bills and how to increase the export bill. And one of the major challenges always was in terms of the trade finance for cross-border shipments. And I think that is another thing which with I think if you know the one another proposal on the budget is basically that I think four or five ministry will come together and create a task force to improve the entire export out of India scenario. And one part of that has already happened, I think last week or this week, where they announced the digitization of e-bills, e-shipments, bill of landing, all those things has been now digitized. What it leads to is basically trusted access of data and a documentation. Once you create that trusted source of data and documentation for everybody, the next which it will follow up it is basically financials will come up and say that I'm becoming more confident in lending into these things or financing into these things. More financing will lead to more production by the exporters, and that more production by exporters will lead to more exports out of India. So these are the three things which I definitely think is going to be a game changer for India's economy, and then help us become, maybe a 10-20 trillion dollar economy very soon.
Absolutely. I think the digital transformation is ushering in a new era for supply chain financing, and the sector is transforming on the back of technologies like AI, Gen AI. Of course, we'll also see more integration of blockchain in the future, and these advancements not only optimize financial processes but also contribute to a more resilient, transparent, and a responsive supply chain finance ecosystem. And I think with technological advancements in place, it is sure that a smart supply chain will be the new normal in the future. Thank you so much, Manish, for taking out the time and effort to be on podcast today, and helping us understand that the supply chain finance landscape in India is poised to achieve a transformative growth, which will reflect the country's rapid digital transformation and the burgeoning fintech sector. And of course, it is primarily driven by technological advancement, supportive policies, and of course, how we also need government initiatives that can help in evolving economic environments. Thank you so much for your insights today, Manish. It was lovely chatting with you.
Thanks, Priya. Thanks a lot for having me on your podcast. And thanks to all your listeners of Analytics Insight for able to listen to us. And hopefully I've shared some tidbits which can help people understand this entire ecosystem, and especially the supply chain finance in a more in a more light.
Yes, thank you so much, Manish. I'm sure our listeners are going to enjoy listening to today's episode and, of course, your insights. So, this is for our listeners. I hope you enjoyed today's discussion around the supply chain finance and how probably you can tweak your strategies to adapt to the changing financial ecosystem. Don't forget to subscribe, share it within your network, leave a review, and also comment what is something that you want to learn more about in our next podcast episode. Till then, stay tuned, and you can view all our previous podcasts on Spotify and other leading